And we're back on Morning Trade Live. All eyes will be on Broadcom after the close today as the chipmaker will report earnings for its fiscal fourth quarter. Expectations are for adjusted EPS of $1.87 a pop on revenue of $17.5 billion, as investors will be eagerly awaiting commentary on AI chips, of course, on its last, earnings call. CEO Hock Tan announced the company had secured $10 billion from a new qualified customers, which he said would significantly improve the AI revenue outlook for fiscal 2026. So shares of Broadcom hit a record high yesterday and are up over 75% this year. But we are seeing a little bit of softness here, about 4% lower in the session off the back of some of the concerns off the back of Oracle's disappointing numbers as well. So joining us now for a preview of this one, Michelle Connell, President and Owner, Porsche Capital Management. Very good morning to you, Michelle. Thanks so much for joining me. So what are you expecting from the results today?
Well, thanks for having me, Sam. I'm expecting good earnings, but there's been so much momentum going into this stock in the last month. It's up over 17% in the last 30 days, that maybe there's a little bit too much enthusiasm. You've had a lot of sell-side analysts taking up their estimates in the last month, and that's what's propelled the stock that amount in the last 30 days, while the NASDAQ has kind of faltered.
Do you think what we got from Oracle as far as some of the concerns now in the market today, which perhaps speaks to why this name is lower, just really being dragged down by the broader sector, is going to have any sort of impact on how investors react come this afternoon?
Always painted with the same AI brush, right? So I'm sure that they're getting tainted as well. It's really hard to continue to provide the growth that's expectation within these stocks. And investors should know that next year it's expected that Broadcom's AI earnings are supposed to be up 50 to 60%. Is that possible? We've had a lot of good announcements going into this. Broadcom announced a new contract with OpenAI in the last 90 days, and you referenced some of the other contracts that they've announced. But can that continue? And, the stock's done extremely well, almost up 80% year to date. And maybe it's time to take some profits off the table and see what that company is going to say. Is that 50 to 60% AI momentum going to continue?
What's the key metric, or what's the number that you're going to be looking out for? Obviously, because there's been a lot of attention, with the likes of Oracle, for instance, with the RPO. We want to hear about, obviously customers. We want to hear about partnerships, who they're teaming up with. What is the key metric that you're going to be paying attention to?
I want to see what the backlog and the orders are for the ASIC or their custom AI chips. I think that's what the emphasis is going to be on this particular name. And maybe also there are going to be some new contracts that will be announced at the same time that will help that huge amount of growth be continued and have the momentum.
Okay, so as far as the stock is concerned, obviously we've seen this big run up, a little bit of softness here today, but you do believe that this could be a bit of a sell the news event, particularly as investors do look to sort of book some profits, take some money off the table here?
I would say that that's the case. And also you've had so many analysts have taken up their estimates for the next 12 months. Maybe it's near-term softness, and we'll see what the company says in terms of their long-term view.
What has this company got to say that's different about chips? Because it looks like the narrative has shifted very much in even just recent weeks. I mean, you've got TPUs, CPUs, GPUs, and obviously everyone's been busily doing their homework trying to get across what the difference is between all those things. But I mean, what has this company got to say to reassure that they've got the edge here as to what they're doing specifically?
Very different story than Nvidia. Nvidia is more of a GPU or a generalist AI chip, whereas Broadcom is the specialist, and they can give you that customization. So they're going to put their emphasis on that, and they, in fact, can provide that customization, or what's known as an ASIC chip. So they're in a very different ball field or camp than Nvidia in terms of what they're providing their customers and the hyperscalers.
Yeah. Okay, plenty to look out for when we hear from this company later this afternoon with its report card. Thank you so much for getting us across this and a bit of a preview, Michelle. Appreciate it. Michelle Connell, President and owner, Porsche Capital Management. Let's trade it now with Tom White, host of Fast Market. Very good morning to you, Tom. So your example trade for Broadcom this morning.
Yeah, I think I'm going to look, Sam, here at don't be a hero type of strategy here where I can take advantage of this higher implied volatility levels that we're seeing going into this report. The option market pricing in over a 6.5% move either way, or about $26 in either direction in these shares. The stock hit those all-time highs just yesterday, pulling back over 4% today. So maybe that gives you some opportunities here. So I looked at something that's passive. You can still take a directional bias, but be a little bit more conservative, a little bit more passive on this type of position. So I looked at a neutral to bullish short put vertical if you think the stock's going to at least consolidate, maybe even go a little bit lower, but you just don't want it to kind of fall, maybe like what we saw out of Oracle, as the expectations are pretty elevated in this one. Going out to the December 12th weekly option, so just 1 day to expiration on the short-term position. We're going to sell the 375 strike put that's out of the money to the downside by about 20 bucks. And then against it, because we want to stay risk defined, anything can happen going into earnings, we're going to buy the 365 strike put. So a short $10 wide, neutral to bullish put vertical. You're going to collect roughly about a 220 credit I've got up there. You're probably collecting closer to 270 at this point because the stock has continued to pull back. But that credit you collect is what you can make on the trade. So per spread, you can make $220 if you collect a 220 credit with about 780 bucks in risk. You've got a lot of risk on this one, but your probability of that short strike, the 375 put, being out of the money at expiration, which is what you want the stock to be higher than 375, it's about 70% probability of finishing out of the money. So the probabilities are in your favor on this one. If you collect that 220 credit, it takes your break even down to 372.80 to the downside. That's a cushion of about 5.5% from current share price and almost to that one standard deviation move that the option market's pricing in. I call this, in a baseball analogy, you're trying to hit a single, trying to hit maybe a double, take a walk on something like this. You've got a lot of risk on this, 780 bucks to make only 220. But I think the key is you're staying risk defined. You know exactly what your potential downside is if it does fall. But then at the same time, you're giving yourself that cushion to the downside. You profit in 3 out of 4 scenarios, right? Stock goes higher, you make money. Stock stays where it is, you profit that 220 credit you collect. Stock can even go, you can be wrong, stock can go down. As long as it stays above that 372.80 break even, you're going to be profitable on this passive neutral to bullish short put vertical.
Baseball, Tom, throw this Aussie a bone. Give me an AFL analogy or a cricket analogy or something, particularly what's going on with the Ashes right now. Thanks so much for the example trade. Don't be a hero, in the words of Tom White.